This is Shelley Kraft coming live from the 45th Annual New Orleans Investment Conference 2019 here in New Orleans. I have Rick Rule from Sprott USA. It's a publicly traded company. The symbol is SPOXF, and it's also SII on the TSX, and we're doing a Wall Street view on SNN.Network. Rick, welcome back to SNN Live.
Thank you, Shelley. Delightful to be with you.
It's good to have you. So, in anticipation of you coming on, first what I want you to do is tell us what you speak about at this conference.
This conference, my talk was primarily about precious metals. The New Orleans conference has, of course, a long and proud history, started as the National Committee for Monetary Reform. And I talked about the fact, I really spoke off the 40-year Barron's gold mining index. Talked about the fact that, first of all, we're much closer to the bottom than we are to the top. And that in the nine prior up cycles from oversold bottoms, the gold mining stock index has varied between a 200% gain and a 1,200% gain over periods of time as short as 9 months and as long as 46 months. The point of that is that you should participate in gold bull markets, and you don't really need to try to outperform the markets by owning the riskiest of the riskiest. That 75% of your money should be in the market, but should be in the market in great names. In other words, de-risk the return rather than increase risk to increase the return. That was the crux of the speech.
So, you're an old-timer in the business. We're both old-timers in the business. When you think about this market and all of your years of experience, what is the one biggest surprise you've ever had?
Let me think about that. Well, the biggest surprise I ever had, of course, was my first bull market, where the pricing narrative caused me to believe the bull market was going to last forever. And that, of course, didn't happen. Markets work. You learn that the cure for low prices is low prices, and the cure for high prices is high prices. I have to say that I have been very surprised in this market with the continued strength of sovereign debt and sovereign bonds in a negative interest rate environment. The reason that I'm so bullish about gold is that I sort of believe that gold trades over time inverse to confidence in the purchasing power of the U.S. dollar. My friend Jim Grant calls long-term treasuries return-free risk, which is not a flattering sobriquet, and I'm actually surprised it's taken gold as long as it has to begin to move up.
From your standpoint, are you seeing the same thing I'm seeing? The companies that I'm interviewing, they have a jump in their step. They've got a new confidence, but it's not just based on the gold price. There's something underneath that seemingly, and I've asked questions, has something to do with the producers are running out of gold. Comment.
Well, certainly there's that. The industry has underinvested and misinvested in both exploration and development for probably 2 decades. And the chickens are coming home to roost. On the supply side in the gold business, the outlook is dire. And companies are going to have to do something really drastic to grow. Remember that every day that you extract rock from a mine, your business gets smaller. The result of that will be that good discoveries, when they're made, and they're very rare, will sell at absolutely eye-popping multiples. We talked earlier, or rather last year, you and I, about the fact that we're going to have a really tremendous merger and acquisition cycle in the gold mining business. We've seen some of it, but it's still underway. Larger companies trade at better multiples. They trade with more liquidity. The companies need to reduce general and administrative expense by merging, and they need to merge merely to maintain production. So you're going to see a lot of that. And I think that's one of the reasons why you see some sort of pop in the step of some of the juniors. They see what the exit is likely to be if they succeed.
Right. So we have an audience that is high net worth accredited investors, millennials, small funds that focus on small and micro and nano cap stocks. What advice, particularly to millennials who might be diversified in their portfolio, with a lack of resource in their portfolio. What could you say to them to give them some direction in how they should approach the resource market, if you would?
Well, it's interesting. The last 18 months, we've seen a real upsurge of interest from millennial investors in the precious metal space. I would say that precious metals occupies two places in your portfolio. The first is as insurance. Gold has historically been a form of real money, a medium of exchange which is simultaneously a store of value, something missing in other forms of money. Millennials need to pay attention to history, and gold has some history. The second attribute of gold is that within reason, it's an easy to understand investment. Technology investments, which millennials are drawn to because of the performance of technology over 20 years, and millennials' familiarity with technology, is more complex. I'm not saying don't invest in technology, by the way. I have a lot of very good friends in Silicon Valley. I was brought up in Silicon Valley. When they tell me that the half-life of a new technology is 18 months, what that means is that by the time I understand that technology, it's obsolete. Gold has been around for 2,000 years. When gold is oversold and nobody wants to own it, buy it. When gold is extremely popular and it looks like the world is going up in flames, sell it. That's where gold and gold stocks are in your portfolio. I believe that the millennials have better access to information via the web and other places than any generation before them. And I also believe that millennials are more narrative-oriented than any generation before them. And the gold narrative, once it's reinforced by price action, because the narrative involves the primary investment motivators, which are both greed and fear, will enjoy a very broad audience among millennials.
So now, we're talking about precious metals, but I want to bring up basic metals because what in the coming issue of the MicroCap review, we did a focus, and instead of trying to force feed basic, base metals and non-precious metals into the market, we took the EV route.
Right.
And that led us into, the cobalt, the lithium, the graphite. And we kind of see that that's a way of communicating the base metals to the millennial and other audience in the U.S. in particular. Your comment on that?
I think that's highly intelligent. You need to market to people based on affinity, and there is an angle in mining that's about the future as opposed to about the past. And certainly the battery metals and the technology metals are a story which is at once interesting and true, which makes it a good story. It's also instructive that all of the metals that you describe, while they're in a family by way of utility, are all very different markets. The lithium market is extremely different than the cobalt market. And your ability to teach that to millennials will inure to the benefit of those millennials. Of course, when you're looking at these small markets, you have to understand that they're even more volatile than the big markets like oil and copper, which are inherently volatile themselves. And in metals like cobalt in particular, in addition to understanding the market, you're going to have to familiarize yourself with political and social risks in places like South Africa, Zimbabwe, Congo, and Russia, where those metals are produced. But the topic is fascinating, and the millennials, with their access to the web, will be unusually able to participate in those markets because of the diversity of their sources of information.
Now I got a good one to throw at you. You're going to like this one. So, you've now got electric vehicles and the battery market. Obviously, they're talking about having an impact on oil and gas, for sure. What I'm looking at is the price of uranium at these all-time lows and still suffering from the 2011 Fukushima. I mean, what's your comment on that?
In the near term, just like last year, we talked about it, the price of uranium will be driven by the pace of Japanese restarts. Most of the unsold inventory in the world that hangs over the market, that depresses prices, is Japanese reactor fuel. If the Japanese are successful in restarting 12 or 15 reactors in the next 18 months, the uranium price takes care of itself. The resolution is on the way, make no mistake. Last year we used more uranium than we used pre-Fukushima, despite the fact that Japan and Germany are both down, gone. New reactor builds in places, particularly like the People's Republic of China, but also the Persian Gulf, have increased uranium demand to all-time highs. But there is still a lot of above-ground inventory held principally in Japan. So the pace of Japanese restarts is really going to determine the price of uranium.
What is the number one question you're getting from investors that are at this conference?
I think investors have a sense that there is gathering momentum in precious metals. And the two questions that they have is, when will the bull market get underway in earnest? Gold has clawed its way from 1,100 to 15, but it hasn't shot. And you've been around markets before. When gold moves, it really, really, really moves. And the second question is, because this is an older crowd that's seen a lot of markets, our vintage, when gold moves, silver usually moves afterwards, but it moves faster and further. When will silver get going? So the two questions, I think, have been when questions here, not if questions.
And how do you answer them?
Predictions tell you a lot about the predictor, but not too much about the future. So what I say is, I honestly believe that we have a sea change now in precious metals markets as a consequence of negative real yields on government debt. But I can't tell you when people lose confidence. There is a strong narrative in the United States that's bullish, and I think that's wonderful. It's part of the great thing about the American character. It's why the other part of your business, technology and microcaps and stuff, works. But the truth is that the overall arithmetic is, in the interim, not so good. And that probably inures to the benefit of gold. A long way of saying I have no earthly idea, Shelley.
Honesty is a virtue, my friend. Let's get your website out for more information, if you would.
www.sprottglobal.com.
Ladies and gentlemen, the Rick Rule from Sprott USA. It's a publicly traded company, SPOSXF in the US, SII on the TSX. I'm Shelley Kraft. This is SNN Live, and this is a Wall Street view on SNN.Network, coming to you from the 45th Annual New Orleans Investment Conference 2019 here in New Orleans. Rick, thanks for coming on.
My pleasure. Thank you.
My pleasure.